Imagine waking up one morning 10 years from now, opening your portfolio, and realizing you don't need to rush to work anymore. Your money is finally working harder than you ever did. That's the dream most people have when they think about retiring rich, but very few have a clear plan to get there. Today, I'm going to walk you through a powerful long-term investing story built around just 9 carefully chosen stocks that, if held patiently for the next decade, could put you on a serious path toward financial freedom. This is not about getting rich overnight, chasing hype, or gambling on the next meme stock. This is about discipline, vision, and understanding how wealth is really built in the stock market. Let's start with a mindset shift. 10 years is a very long time in the market. Entire industries can be born, disrupted, or completely transformed. If you look back 10 years from today, you'll notice that the biggest winners were not random picks. They were companies with strong fundamentals, massive growth runways, and leadership positions in trends that shape the world. The goal here is simple: own businesses that are likely to be much bigger, stronger, and more profitable 10 years from now than they are today. The first stock in this long-term journey is Apple. Apple is more than just an iPhone company. It's an ecosystem. Once someone enters the Apple world, they tend to stay. Services like the App Store, iCloud, Apple Music, and Apple Pay create recurring revenue streams that keep growing year after year. Over the next decade, Apple is expected to expand further into wearables, augmented reality, health technology, and financial services. This kind of steady innovation combined with unmatched brand loyalty makes Apple a foundation stock for anyone aiming to remain one of the most dominant forces in the world. Microsoft is deeply embedded in businesses globally through Windows, Office, and enterprise software. But the real growth engine is cloud computing with Azure. As more companies move their operations online, cloud demand keeps exploding. Add artificial intelligence integration across products, and Microsoft becomes a compounding machine. Holding this stock for 10 years is like owning a toll road for the digital economy. The third stock is Nvidia, and this one represents the future of computing. Nvidia started as a graphics card company for gamers, but today it's at the center of artificial intelligence, data centers, autonomous vehicles, and advanced computing. Every major AI model needs massive computing power, and Nvidia's chips are the gold standard. If artificial intelligence continues to grow as expected over the next decade, Nvidia could remain one of the biggest winners of this technological revolution. Now let's talk about Amazon. Many people think Amazon is just an online shopping platform, but that's only part of the story. Amazon Web Services is one of the most profitable cloud businesses in the world, powering thousands of companies behind the scenes. On top of that, Amazon is expanding in logistics, advertising, streaming, and even healthcare. The company constantly reinvests its profits to build future growth engines, which is exactly what long-term investors want to see. The fifth stock on this list is Alphabet. Google dominates online search, digital advertising, and mobile operating systems through Android. But Alphabet's real long-term value lies in its ability to innovate beyond advertising. YouTube continues to grow as a global media platform, Google Cloud is gaining market share, and projects in artificial intelligence, self-driving technology, and quantum computing could unlock massive value over the next 10 years. Alphabet gives you exposure to both stable cash flow and moonshot potential. Stock number 6 is Tesla, and this is where growth meets disruption. Tesla is not just a car company, it's an energy and technology company. Electric vehicles are still in the early stages of global adoption, and Tesla remains the leader in battery technology, software, and charging infrastructure. Beyond cars, Tesla is working on energy storage, solar solutions, and autonomous driving. If these technologies mature over the next decade, Tesla could redefine multiple industries at once. The seventh stock is Meta Platforms. Meta owns platforms that billions of people use every day, including Facebook, Instagram, and WhatsApp. Advertising remains its core revenue source, but the company is investing heavily in virtual reality, augmented reality, and the metaverse. While these investments may take time to pay off, Meta's massive user base and data advantage give it a strong chance to shape how people interact online in the future. Long-term investing often rewards companies willing to think far ahead. Next up is Berkshire Hathaway, a different kind of stock compared to the others. Berkshire is essentially a diversified portfolio run by some of the best capital allocators in history. It owns insurance businesses, railroads, energy companies, and large stakes in top corporations. This stock brings stability, disciplined investing, and steady compounding. Over 10 years, Berkshire can act as a powerful anchor that balances growth-focused investments. The ninth and final stock is Johnson & Johnson. Healthcare is one of the most reliable long-term sectors because people will always need medical care, medicines, and health products. Johnson & Johnson has a strong presence in pharmaceuticals, medical devices, and consumer health. Its consistent cash flow, research pipeline, and global reach make it an excellent stock for long-term wealth preservation and growth. Now, owning these 9 stocks is only part of the strategy. The real magic happens when you combine time, patience, and consistency. Imagine investing regularly into these companies, reinvesting dividends, and ignoring short-term market noise. There will be crashes, corrections, and scary headlines, but history shows that high-quality businesses tend to recover and grow stronger over time. The investors who retire rich are usually the ones who stayed invested when others panicked. Another key factor is compounding. Compounding works slowly at first, almost invisibly. In the early years, progress feels boring. But as time goes on, gains start to stack on top of gains. 10 years of compounding in strong companies can lead to exponential growth. That's why starting early and staying consistent matters more than timing the perfect entry. Risk management also plays a big role. These 9 stocks span different industries like technology, healthcare, energy, consumer products, and finance. This diversification helps protect your portfolio from major damage if one sector struggles. At the same time, you're still positioned to benefit from some of the biggest growth trends shaping the future. Finally, remember that retiring rich is not just about money. It's about freedom. Freedom to choose how you spend your time, who you spend it with, and what kind of life you want to live. Investing in strong, future-focused companies and holding them patiently for 10 years is one of the most realistic ways to turn that vision into reality. If you stay disciplined, avoid emotional decisions, and let these businesses grow alongside the global economy, the next decade could completely change your financial life. This is the long game, and those who play it well are often the ones who win big in the end.